I'm Danni Hewson, Head of Financial Analysis at AJ Bell, and I'm joined by James Flintoft, Head of Investment Solutions at AJ Bell. We're going to discuss the performance of AJ Bell funds in the final quarter of 2025, the year as a whole, and also what 2026 might have in store. James, thanks so much for joining us.
Hi, Danny.
So let's start with the main talking points for the final quarter of 2025.
Yeah, so lots of headlines, but not too many that impacted markets really. If you think about the UK budget, there was a lot of news around that, but actually in the end passed relatively smoothly in terms of markets there, despite some nervousness leading up to it. And then across in the US government shutdown, second longest on record, quite a headline-grabbing event, but not something that really bothered markets too much.
So let's focus on equities to start then. What stood out for you?
Emerging markets really, again, as we've seen throughout the rest of 2025, South Korea and Taiwan have really performed well. The AI theme has been strong there in a couple of the top names in those indices. Beyond that, actually, some markets not playing into the AI theme, actually the UK and Europe have done very well, with financials, materials, some miners doing well, particularly towards the end of the year as well there.
And we're still talking about bonds.
Yeah, and there's been a better environment for bonds in Q4 as inflation started to come down a touch. That's allowed central banks in the UK and US to reduce interest rates a bit further. So generally quite good news for government bond markets. Corporate bonds have been quite good as well.
Now, specifically AJ Bell funds, how have they done?
Very pleased really with performance over the year. It's been a good year for risk assets, so equities in particular. As you go up the risk spectrum in terms of the funds, they've incrementally improved in terms of the returns, particularly those funds that have got a lot allocated to emerging markets in Europe, for example, they've done particularly well.
And you made some changes looking back at the start of January 2025. How did that impact the funds? And also, are you making any further changes for 2026?
Yeah, so looking back, pleased with the changes that we made last year. In bond markets, we shortened duration, so less sensitivity to interest rates there. And at the same time, we introduced some inflation-protected bonds in the US. They've done well in delivering a better journey than global government bond markets. On the equity side, mainly that rotation that we had into Europe, that's been the best performing asset class that we look at on a headline basis this year, so quite pleased with that. Looking forward, we are looking to make some further changes to the portfolios shortly, rotating them in terms of sectors in the US and keeping that focus on inflation in bond markets as well.
And since it's the start of the year, I'm going to ask you to look even further forward. And what are you thinking about might be some of the key things to watch in 2026?
Yeah, so I think going back to that point around diversification, I think that's key. I think it's key at all times, but I really think it's like, given how markets have traded over the last year and that concentration within some of those markets, and as I said, that AI theme proving strong in a number of those markets, I think that's a key thing to watch for the coming year.
James, thanks so much for joining us, and we look forward to catching up with you and the rest of the team throughout 2026.